Bloody day for tech holders today as the NASDAQ dropped 262 points, just about 2%. We had a nice little rally at the end to restore some of the gains, but overall, a very, very bloody day, especially for Apple, which was down over 4.5% at one point today. The main reason because interest rates. Secretary Janet Yellen stated that rates may have to rise somewhat to keep the economy from overheating. Now, this obviously caused a massive sell-off in surprising stocks. I did not think that Apple and some of these stocks would have taken a hit as hard as they did. I think it was way overreacted. I think that some of the higher valuable multiple growth stocks should have, but Apple, which is traded at only a 28 P ratio, got hammered today. So what does that mean? We go ahead and buy. We buy the dip. So this is the chart for Apple. This is right before earnings. Bam, earnings, it pops up big, and then it just sold off. This is actually not even close to where it was. I mean, we saw, like I said, in after hours, this is about 138, and then it came all the way back down, sat, and then today just absolutely took a massive hit. So it's trading very, very low today. If we go ahead and actually look at some of my positions in Apple, like I said, we sold 2 puts on Apple, but then we also have 37 put credit spreads, which is a very bullish position on Apple. Like I said, I really, really like this company a lot. I think they're doing everything right. They just had a blowout earnings quarter, and I think this is the time you buy the dip. You buy the dip on stuff like this, Microsoft, AMD, Amazon, BABA. We bought the dip on all these today. We went ahead and sold some more AMDs. We went ahead and sold some more Amazon put credit spreads, so some more BABA put credit spreads, Microsoft. These are the companies you want to buy on the dips when they dip for no reason. You look at Amazon, and this thing just got absolutely obliterated today. Recovered pretty nicely at the end, but man, this thing was low, 32.27. I don't know if you guys remember, but after earnings, this thing was 36.70 in after hours. And has already lost over 350 points since then. That is a crazy sell-off after an amazing earnings quarter. And, this is why I just believe that this is an amazing opportunity to buy the dip, and that's exactly what we try to do. We're out of funds. We have nothing left. We're completely on margin as well. But, I mean, we're long-term. We're in quality. And we definitely believe in these companies because they've proven time and time again that they deserve to be up there by beating earnings, week, quarter after quarter. So, like I said, we bought a bunch today, about as much as you can possibly buy. Again, we don't have any more buying power left. We're all in, and that's what we like to be. We like to be like this when things get oversold for no reason. I believe, especially for Apple and Amazon, man, that's just these are gifts this low. I mean, like I said. First off, you go ahead and look at Apple. Apple's still trading way off of its, all-time highs, down about 12% from there. Amazon, same thing. But also, when it comes to Apple, Apple reported one of the most blowout quarters we've ever seen. And the stock gets sold off hard because of that. And it's not like it had a run-up before. If anything, it went down, before. It's traded pretty sideways, for the past months. Year to date, the stock is still down, about 2.5%. Like I said, we had that run up before last earnings, and it got sold off. That was expected. The stock should have been around, 137, 136 after that earnings. But then this earnings, it should have put it right up to about 145. So the fact that it's down here, 127s, that's a joke. Anything under 130 is an absolute bargain. I'm telling you, you guys are looking at a stock with a PE ratio of in the 28s. That has tremendous growth as well. It's a pure buy, and so we went ahead and invested so much into Apple. Like I said, Apple and Amazon, I truly believe in these two companies, and I believe they're going to continue to rise. Amazon, you go ahead and look at that. The thing just got sold off massively. This isn't even including after hours, and it's still a 7% drop. After hours, it's a 10% drop from where it was. Over 10% drop since it was in after hours, which is just crazy to think that, after posting such an amazing, robust earnings beat, it crashes as hard. And, analysts are still expecting, massive upside. And you go ahead and you look at some of the price targets on some of these things, and it's crazy. It's like, I don't know if the analysts are, stupid or if the stock price is just grossly undervalued. But Amazon has an average price target of 43, not 32, 42.89, and it's trading at 3,300 right now. You go ahead and look at Apple. Apple's average price target is 160. So again, both trading much lower than the range. I mean, the lowest analyst target has a price target of 125. The average being 159. Some of them even saying 185 for Apple. I definitely could see 150 by the end of the year. I think that's very modest and conservative to say as well. So, it's opportunities like this. You just buy the dip, you hold, and, you expect good things in the end. I truly believe in that. I'm looking at some of these charts, and they're just getting beat down for no good reason. Massive sell-offs, and look at that. It's just brutal, absolutely brutal that it can get sold off that hard. But again, these are buying opportunities. They've proven themselves to be time and time again, and I expect the exact same thing. So I'm buying the dip. I'm buying the dip huge. I think it's an amazing opportunity, and I'm excited to see what happens in the future. We loaded up on a couple of other positions as well. Nothing too significant. A little bit of Fastly here and there. Some Netflix, PLTR we got. We got our XPEV. We had to sell one of our XPEV puts, unfortunately, to get enough cash to go ahead and sell some more of the Apples. So, we're big on the Apple. Apples are probably our second biggest position. Bob is obviously our number one position. Apples are probably our second, tied with Amazon. Apple and Amazon are basically the same. They're both, massive positions of mine. And then we got AMD coming in third place or fourth place, and then Microsoft coming in right after that. But I really like these companies a lot. I think they're a massive discount, especially after the earnings that they just put up. It'd be one thing if they got sold off because of bad earnings, but they didn't. They got sold off just because of FUD, which is fear, uncertainty, and doubt. That's the time you pounce on those. But like I said, all of these are, just grossly undervalued from where they are. And like I said, I'm going to continue to buy the dip. So that's exactly what we're going to do. And let me know what your guys' thoughts are on this. Hopefully things get cleared up about these interest rates, and it was just a simple overreaction sell-off. But I mean, overall it's been a pretty bad year to date for companies like Apple that are down still 2.5% since the year started, despite posting two massive earnings beats. So it's gonna be rough, but I definitely think that reality will kick in soon, and these stocks will absolutely fly. So over time, it always seems to pay off that way, and always seems to go like that, even when there's like little rough, choppy spots. Overall the trajectory is usually always up when the numbers back it. So look at those metrics, look at those fundamentals. I think it's an amazing time to buy, and that's exactly what I'm doing. So guys, have a wonderful day. Let me know your thoughts are on this, and I will see you guys in the next video. Hope you guys are enjoying all the videos I'm posting out as well. 3 in a day is a lot for me. It's a lot of work, so if you guys do enjoy it, please hit that like and subscribe button, and I will see you guys in the next one. Have a wonderful day. Talk to you tomorrow. Bye.